This video deals with an example of financial assets at fair value through other comprehensive income. Now, before we start looking at the example, it is important to understand what happens in the category at fair value through other comprehensive income. If an entity has an investment in equity instruments of another entity, in other words, an investment in the shares of another entity, they can elect to put that investment in the category financial assets at fair value through OCI. This means that the investment at each reporting date will need to be presented at its fair value in the statement of financial position. Any fair value adjustment, whether it's an upwards adjustment or a downwards adjustment, will go through other comprehensive income. That means in the bottom of your statement of profit and loss and other comprehensive income, you will show a fair value adjustment, which can either be a positive, an upwards adjustment, or a negative, which is a downwards adjustment. The other comprehensive income that you see at the bottom of your statement of profit and loss and other comprehensive income will be transferred to the statement of changes in equity, but not to retained earnings. Profit for the year is transferred to retained earnings. OCI does not go to retained earnings. This specific OCI will go to a brand new column in the statement of changes in equity. That column is called the mark-to-market reserve. You mark the shares to their market value, mark-to-market reserve. Because there can be a mark-to-market reserve on either equity or debt instruments, it is important to specify in your statement of changes in equity that this is a mark-to-market reserve on equity instruments. Okay, let's start with example 5. If we look at the given information, it says Friedrich Limited, which sells financial calculators to retailers, purchased 100,000 ordinary shares in Colwa Limited at R3.50 per share on 15 April 2019. Now, usually share transactions happen at fair value unless we very specifically state something else. It is a market transaction in the marketplace between a buyer and a seller, and those transactions happen at fair value. That R3.50 that they paid per share therefore represents the fair value of those shares on acquisition date 15 April. This acquisition resulted in Friedrich Limited having control over 15% of the voting rights in Colwa Limited, a major supplier of financial calculators to Friedrich Limited. Now, if we have a look at that 15% voting right, that means that Friedrich Limited cannot control Colwa Limited. Colwa Limited will not be a subsidiary of Friedrich Limited if we just look at the voting rights. There might be other reasons that Colwa Limited could be a subsidiary, but on the voting rights, they do not have a majority of the voting rights, and Colwa Limited is not a subsidiary. Could we give you an example in the category financial assets at fair value through OCI where it is a subsidiary? Yes, we can. An investment in a subsidiary is still an investment in the equity instruments of another entity if you look at the separate financial statements of the parent. In this example, however, it is not a parent-subsidiary relationship. Okay, the information continues. This secured preferential supplies of calculators to Friedrich Limited. transaction costs of 15,000 Rand were paid by Friedrich Limited on the purchase of these shares on 15 April 2019. What do they mean with transaction costs? Usually, if an entity has transactions in the shares of another entity, it takes place through a broker. And that broker will charge the entity for their services. So that 15,000 that was paid by Friedrich Limited is to a broker that handled this share transaction. Now these shares, they tell us, are not held for speculative purposes. What would that mean? Speculative purposes, that would mean the shares were acquired for active buying and selling, for trading, for speculating with the shares, short-term profit making. If that had been the case, these specific shares, the investment in these shares would have to be classified in the category at fair value through profit or loss. It cannot fall in the category at fair value through OCI if you are trading in those shares. So it's important that they tell us these shares are not held for speculative purposes for trading. Furthermore, they are also not designated at initial recognition as at fair value through profit or loss. So they could have designated this investment to fall in the category at fair value through profit or loss. They did not do it. Does that then mean it will automatically be in the category at fair value through OCI? No. The default category for financial assets is at fair value through profit or loss. Therefore, we have to tell you what they give us in the next sentence. Friedrich Limited elected irrevocably at initial recognition to classify this investment as at fair value through OCI. This election has to happen initially at initial recognition, and it is irrevocable, which means it cannot be changed. You have elected this category and you cannot elect out of that category again. Both Friedrich Limited and Colwa Limited are listed on the JSE. Both companies' reporting periods end on 30 June.